Hey, good morning. This is a Bitcoin morning brief, and we have Saifedean on today. This is going to be awesome. It's going to go from news brief into fireside chat, and I'm very excited. So, Saif, how's it going? Thank you.
Thank you so much for having me, Leia and Tone. Always fun to hang out with you guys online and in person.
Also true. Tone, what's up? Einstein's kind of licking your head.
I know, it's awesome. I got my ear up there. There you go. No, it's great to finally have Saifedean on. I am in the city, a lot of work to do all day. Had to, meet a few people. So yeah, let's get going. I want to hear Saif's thoughts on our current news day.
All
Love
right,
it.
let's do it.
Let's do it. And by the way, guys, there's going to be a little bit of a shill at the beginning. So without further ado, we're missing Rodolfo, so we had to do it. Just an announcement that Cold Card are out, and pretty much everyone, I've been seeing this all over, and they are loving it. So everybody, if you have your Cold Card, you can chill it. I know Rodolfo will laugh and love it, but you're killing it, Rodolfo. Another home run is what this guy said. So, all right. Safe, we got you on. So let's.
Oh, I'm sorry. Was that guy Mike in space?
Is Mike in space?
Hey,
Mike in space.
oh, he's got my hat.
Yeah.
Awesome.
Yeah.
And
cool.
liquid and liquid detergent.
I love it. Hello, buddy. Okay. So the World Bank, we're just going to start you off. We had a fun conversation when you were on with Tyler and I about this. Not about this. So what this is World Bank prices first global blockchain bond. They raised a 110 million. So simply put, they launched their first blockchain bond. My opinion really quickly is that this is really the World Bank's attempt to stay relevant, utilize what Giacomo has been calling, right, proof of news, the blockchain buzzword. And moreover, since they're really most criticized for lack of transparency and putting money into the hands of dictators, I'll say it on this show, in sub-Saharan Africa, given mismanagement of their supply chain, I think it's pretty much the best possible proof of news. Safe, what are your thoughts about this blockchain bond?
Yeah, I don't think it really makes much sense or any sense at all. I mean, the World Bank has always been issuing its own bonds. There's nothing new about this. They've been doing this for many years. So the notion that this is in any way called the blockchain, I think, is you read the whole thing and it's just classic blockchain boilerplate, vague news, meaningless buzzwords. But what extra capability are they getting out of using a blockchain? And this is completely unclear. I mean, if it's a bond that the World Bank is issuing, then the World Bank is effectively the counterparty in that transaction, in that bond. And so you're dependent on the World Bank paying it back. And so the notion that it is in any way trustless or that you're removing a third party is completely absurd, which means that why do you need a blockchain for any of that stuff? They talk about distributed ledgers, but the notion of copying ledger data entries and sharing it online is not a blockchain. There's a very big difference between that. And I think, the fact that they're utilizing these buzzwords and going about them, in my opinion, just suggests they're doing exactly what the entire blockchain industry has been doing for the past few years. It's just trying to stay relevant, trying to get in on the news and pretend like they're at the forefront of development and technological growth and technological development and so on, when they're just really do business as usual for them, issuing bonds to finance terrible dictators in Africa and so on. But with blockchain now as an extra added bell and whistle.
Thanks, Safe. Tone, thoughts on the article? Is this a real blockchain?
Yeah, you know what? I'm not sure if this falls into that proof of news category. I consider like proof of news stuff is more like companies within our space that need to stay relevant within our space. This is just, World Bank's misunderstanding of what a blockchain actually is because they're working with the wrong companies. So this was an Australian, Commonwealth Bank of Australia are the ones that brought this to the World Bank. So it's not even that the World Bank is getting bad advice on what a blockchain is. It's just that the Commonwealth of Australia is getting bad advice on what a blockchain is, and they are propagating that information onto the World Bank. I mean, this is fine. I don't really see how this is different than any other bonds that they were doing. All they've done is maybe upgrade their database technology. At least I hope they've updated their database technology by issuing this bond on whatever it is that they issued it on, because it's obviously not a blockchain. Unless the World Bank could make this a blockchain. I don't see why the World Bank wouldn't have the ability to issue a bearer bond the way they used to issue them back in the day, where it's actually at a blockchain and this bond is totally nameless, and anybody anywhere in the world can buy this bond, and the World Bank has no idea who owns this bond, and it's it's an anonymous bearer instrument that the World Bank has to pay interest on, and eventually they will have to pay the principal on. Not exactly sure where they're going to get the money for that. They'll probably tax more people and get more funding. But the point is, unless this bond is a true bearer bond like they used to have in the 80s and 70s, it's not really on the blockchain. It's just on some database connected to the Commonwealth Bank of Australia. So this is how the word blockchain gets totally misused, and makes it sound like it's not, or to us, it makes it sound like it's not innovative, while to these organizations and to the uneducated people reading these articles, it makes it sound innovative, when to us it sounds completely non-innovative. And unless we actually have details on what blockchain they're using, or what database they're using, to be more specific, we're not really going to know if this is an upgrade or a downgrade for issuing future bonds from regulated entities like the World Bank or Commonwealth Bank of Australia.
Yeah, I mean, I think you raised a very good point there, Stone, which is that where they're going to be paying that money back from. If the World Bank was an actual bank that faced real market pressure for the money that it gets and for making returns on it, it would have gone out of business many, many, many years ago. It never makes money on its loans. Well, I'm not sure never is a big word, because, dictators don't run out of money immediately. They spend a lot of time milking the World Bank and milking their currency before things go terrible. But, their track record, I am sure, is beaten by pretty much any kind of financial institution that has survived as long as the World Bank has. The reason they can continue to operate and effectively face no budget constraints of any meaningful sense is that they have a credit line from the United States Federal Reserve. And so effectively, they're a tool of US monetary policy. And that's why, the World Bank never even has a budget issue or a budget problem. It doesn't matter. Brazil gets into trouble, they whip up $30 billion out of nowhere and hand them over to Brazil. There's never a scramble at the World Bank to go and say, well, oh shit, we need $30 billion to give to Brazil. Let's maybe cut off Argentina and South Africa and India and take that money and give it to Brazil. There's never such a thing as an actual budget constraint in any meaningful sense. They can just whip out the money when it needs to come. And so their bonds are just, they're highly likely to be paid off. And I don't think they have any problems with their bond issuance, because they have a direct credit line from the Federal Reserve.
That's absolutely true. They are saying the issuer rating is AAA, naturally. Absolutely correct. The World Bank is funded by the countries who are the top donors, United States being number one, always has been, which is why the World Bank will always have an American president. IMF always European. And so I will end it there. And absolutely, you're correct. They have, I think it was 3 trillion AUM like a couple of years ago. I haven't checked, but they inflate away, countries inflate away their debt. So it's absolutely true. I think we'll find out how this blockchain potentially, or quote unquote, will actually work. But Saif, let's dive right in. You have started a newsletter. Can you tell us about it?
Yes. So what I've decided to do was to write one monthly essay or a few essays every month on issues related to Bitcoin, economic questions related to Bitcoin. And the idea is that, if people would like to read me, it's usually complicated to try and find a forum, and there's really not much of a useful way of writing in terms of going through academic journals, which take forever, or to go through the press, which, you either have restraints on what you can say or restraints on the word count. And so any kind of platform you choose has its limitations. And I decided effectively that the best way to be able to write things is to just write directly to people. So, my book was practically finished almost an entire year before it was available for purchase. And so the publication and publishing industry is pretty slow by internet standards. And in a world like Bitcoin where things move pretty fast, I thought I would start working in a way that where I can just produce my research directly to people who value it and send it to them by an email. And so I'm starting this out now and seeing how it'll work. And hopefully, the more people value my research and want to subscribe in it, the more time it'll allow me to focus on this and to produce this research. And so it's also a test of how much I should be writing, how much time I should be dedicated towards writing for people.
Fantastic. And it says through your Patreon page is how you sign up, yeah?
Yeah, you can sign up through the Patreon page, or you can just email me and sign up over Bitcoin. I'll send you the instructions for how to sign up over Bitcoin as well.
Yeah, click on the Patreon page, Leah. I'm gonna sign up. Yeah, that's what I was gonna ask you, Saifedean, because
Yeah.
I've never actually used Patreon before. I'm trying not to use my credit cards, and I was gonna ask you if I can pay in Bitcoin, because I will certainly sign up for the at least the $50 a month one. I kind of have access to you otherwise, but yeah, no, I'm definitely gonna sign up and support.
Fantastic. Thanks so much, Don. Yeah, you can definitely pay with Bitcoin. It's definitely not that bad of a currency. I'm happy to accept it.
And we have Tuesday, September 4th is the first.
Yes, next week I'm sending out the first essay. So I've been working on it for the past few weeks now.
Awesome. And Tone, you have a link to it, yeah?
A link to what?
Do you have a link to his Patreon page in the...
Oh, no, just click on it. It was in his, if you go back.
Yeah, in the description of this, or I guess we can send it out afterwards.
Oh, no. I just wanted you to pull it up, which is exactly what you did.
Okay, pull it back up.
Yeah.
You got it.
You had it. Yeah, exactly. I just wanted you to click on that link to take you here.
Yeah.
Okay, perfect.
Okay, sounds good. And then, yeah, Saif, if you could keep tweeting it out, and then we could retweet and everybody sign up. This is exciting. Next week. All right. Well, Saif, since we have you, we're gonna evoke you on this one. So this is gonna be a fun one. But it'll really be a conversation between Tone and Saifedean.
Oh yeah. So what is your first topic going to be about on Tuesday, September 4th?
So I'm discussing effectively the financialization of Bitcoin, which is something that people have been talking a lot about over the last few weeks, and the possibility of whether fractional reserve banking could develop over Bitcoin, and then applying that to questions like the ETF or all of these products that are beginning to be introduced by Wall Street firms and trying to get approval at this stage, and whether these are capable of engaging essentially in fractional reserve banking with Bitcoin, and what kind of prospect you would expect for the success of these various different formulas for providing mass access to Bitcoin, basically.
Awesome. Yep, Tone.
No. So what do you think about that? Like in general, I don't want you to give too much away. I do want people to purchase your subscription service. I will myself. Yeah. So I will read more about it. But what is your general thoughts on this? Do you want? Okay, so there's two questions there, right? And some people have a hard time comprehending the two differences. So from what I understand, the SEC's biggest problem on oh yeah, do we want to do this over screen share, or you want to just do it? I think that's what you were getting at, Lee. It's my morning is almost up. I've been up since like 6 a.m. trying to get some work done. So there's there's two main problems, but the SEC has only discussed one of them, right? So the SEC, as just like the CFTC found out, they don't have control of the underlying price discovery of Bitcoin. So that makes turning all of these instruments into Wall Street financialization a little tricky because they don't have control of the underlying price. So I understand why the SEC has been rejecting the ETF, and it makes total sense to me. I think the bigger question that's a regulatory question. I think eventually that will be resolved. That's not what concerns me. What concerns me is a fully Bitcoin-backed ETF good for the Bitcoin ecosystem the way we have, the GLD ETF being backed? Is Safe still with us?
Yes, I'm here.
Okay, cool. So that's the real question, and the SEC is not talking about this yet. I think the SEC will have to deal with the custodianship of the Bitcoin issue if they decide to allow a Bitcoin-backed ETF. Should it be backed 100%? Should it be backed, 10%? I don't know. Honestly, I would love to see it backed I would love to see the Bitcoin ETF backed on a fractional reserve, like maybe 10-1 or something. And if it starts to getting too big, maybe 20-1, right? Like, I don't want all of this Bitcoin being tied up under the ETF because it puts a giant honeypot under the confiscation of government at the whim of a government.
Yeah, that's an interesting idea. So this is effectively, if you make the ETF a fractional reserve, if you make it, as you mentioned, 10-1, then effectively this is similar to a fractional reserve banking. So 10 people own 1 Bitcoin, and yet they only have 1 Bitcoin on hand. The problem with that is that I don't think that's sustainable with something like Bitcoin. And, I get into the history of and the literature review on fractional reserve banking and all sort of economic theory on whether it works or not. And I don't think it's quite sustainable in the long run in Bitcoin, because effectively you're short on Bitcoin. And then there's always the possibility that if more than 1 out of 10 people turn up to ask for their Bitcoins, you don't have enough Bitcoins to serve them. And so I think we're going to see things like that. Now, I don't get into the topic of regulation because that's not something that I'm really very knowledgeable about or all that interested in. So I have no idea if the SEC is going to let something like that function, if they'll let them have fractional reserve banking over Bitcoin or not. But what I think is likely to happen is that you'll see a premium develop over the price of these ETFs, which is what we see with GBTC now. So now you're paying.
Let me just comment on a couple of things there. So the main reason why we have this crazy premium on GBTC is because they don't have enough liquidity. That's a liquidity issue. Because GBTC can only issue shares based on their trust holders interested in liquidating. So the supply isn't really meeting the demand. The reason why I would prefer a fractionally backed ETF is because it's not that it would be a claim. Like right now we have ETNs that are fully paper, right? Like they're just representing a claim. They're not a claim. They're just, there's a company that like trades and does the swap contracts in order to keep a stable price. So I think that if you fractionally reserve this ETF, you're just, showing confidence over the pure paper ETFs that you have a responsible company maintaining that ETF, while at the same time not creating this giant honeypot at risk of confiscation. I think it could be this happy medium, and all the ETF has to say in their disclaimer is that you are just trading this product, to diversify your portfolios. You don't actually have a claim on the underlying Bitcoin. Like it's not going to be like that. It's not like 10 people have a claim on the same Bitcoin. No one has a claim on the same Bitcoin. The ETF company holds that Bitcoin like on reserve to show confidence that they have, like if there is a minor panic, they have money to kind of maintain the ETF.
Yeah, I agree. So, you know, what I was saying initially is that, you know, you'll see some sort of premium develop over the value of the Bitcoin naturally, as you see with the GBTC. You know, nobody is forcing people to go buy a Bitcoin at, what is it on GBTC now? It's about...
it's at least 60% premium.
Yeah, at least 60% premium. So you're getting a Bitcoin today for about $11,000. Nobody's forcing people to buy that on GBTC, but people still do because, and that ETN as well, because these are one of the few ways that are open to people's, say, retirement accounts and stock portfolios to get into some kind of exposure over Bitcoin. So because there is an element of scarcity there that's artificial in that kind of money can't just go and buy Bitcoins and store them. It's more complicated for them. They can't just take the money out of their retirement account, for instance. So there's and because the approval process for ETFs has taken so long, and because other financial institutions providing you with exposure to Bitcoin is not that easy to arrange. It's not that straightforward, you know. It's not as easy as buying or selling stocks for most people. These companies have some sort of monopoly edge on the market right now, which is why there's a premium on top of it. But I don't think this is likely to remain sustainable because, you know, over time, people will find ways of servicing this market demand and entering into it. And then GBTC is not is not necessarily doing anything wrong right now because people are paying for it. But if they start abusing this and taking further risk with it, there could come a day in which there's a run on their reserves in terms of them not having enough money to not having enough Bitcoin to fulfill it. So I think this is really kind of a key point in the paper that I'm writing for the research newsletter, which is you're likely to get some form of fractional reserve banking when there is some kind of monopoly or some kind of restriction on the monetary system. And so the best example of that obviously is the kind of monetary system that you have in the economies of the West, or all over the world, in fact, you know, which is that the government has a monopoly for the central bank, enforces a monopoly for the central bank in terms of the currency. And so the central bank can support the fractional reserve banking system. But if there was a free market, I would expect that fractional reserve banking would not survive, or people would enter into fractional reserve banking, and then in the long run, I think it would not really be workable. But in terms of what you mentioned about the security of this, I mean, you know, a honeypot fractional reserve is half of it is still probably a big honeypot anyway. That's the real issue and the real problem with all of these models and all of the problems for second layer scaling of Bitcoin is the issue of trust in the handling of the Bitcoin. And the people who can solve that issue most convincingly, most reliably, and most simply will benefit a lot, I think. It's going to be the major economic advantage over the next few years in the development of Bitcoin.
Thanks, Saif. Tone, I have a question for you regarding the structure, potential structure. So the director of the SEC raised concerns before about the ability of a digital aspect at ETF in general to be valued at the end of each business day. So we've talked about the VanEck and that it would use the spot price daily. So, and also just, you know, how that's strange, would it work? You know, what are your thoughts on how that could be the appropriate valuation determining fund performance? Do you think that that's a good idea?
No, I mean, it's fine. I mean, we have that now. Gold and silver, they trade 5 days a week, almost 24 hours. The gold futures, they take like a 1 hour break in the afternoon New York time, like around 5 o'clock. Gold doesn't trade. And but then it trades all throughout the night. And there's like a 5-minute settlement time where it doesn't trade around midnight, I believe. I don't remember. It's been a while since I traded futures. But the gold ETF, the silver ETF, they only trade during US business hours. But you have other gold and silver ETFs in other regions. I'm sure there's one on the London exchange. I'm sure there's one on the Hong Kong exchange. So if you do have access to the global markets, you can still trade those ETFs. And if you really need to hedge your position, the weekends is where you're going to run into a little bit of trouble, all commodities and all currencies kind of freeze over the weekend. You can't freeze Bitcoin. But you know what? The world is becoming more digital. You might have to look at it this way in that, I mean, it's kind of great as a stock trader that your stock actually closes, but in 10, 20 years from now, maybe the entire stock market will be a 24/7 operation, or maybe it'll close one day a week, because this is where the world's coming to. This is where we're headed. I mean, Bitcoin could pave the way for 24-hour markets. I don't know. I don't know where that's headed. I'd like to get Saif's thoughts on that, but you have to manage it somehow, and you're not going to stop Bitcoin from trading. So the only way to compete is to open up all markets to 24/7 trading.
Yeah, highly likely. Eventually, that's going to happen. I think the barriers towards that not happening are probably institutional and related to the fact that these institutions face protection from competition. But there's really no reason why anything should stop trading and people should be trading more and more. Having said that, I think a hard money economy like Bitcoin is a place where financial markets are likely to be a little bit more boring, in that, there's the returns that you would expect on a company are going to be more predictable over time. Investments are far more long-term, and people won't necessarily be profiting from short-term speculation. I think there's an inflationary bias because the currency is losing its value. Everybody has to go on the stock market, and so everybody has to invest in order to maintain value. And this means effectively that you never have a safety net or a nest egg or a safe, like a basic safety margin in terms of a money that you can be quite certain will maintain its value into the future. Because you don't have that, you're forced into taking more risks with all of your money, where you're forced into risking all of your money, which basically leaves you with a lot of economic uncertainty because things can go bad. You see the average return on the stock market is positive, but that average includes a lot of people who will get wiped out. That risk is always there. It can always happen. And so I think, this leads to investment being more of a short-term thing, where you have an enormous market of people using the stock market as a store of value, when it shouldn't really be a store of value. The money that should go into a store of value should be the money that needs to be predictable. And then more money goes into investment, but that would be with a vision for the risk. So it would be more of a long-term view. So you would expect that, people's investments would be more long-term, because I think maybe I didn't make the link here very clear, is that long-term lending can't be done with short-term deposits in a free market. That's fractional reserve banking, or maturity mismatching more accurately. So if you didn't have maturity mismatching, companies that want to take out loans for 20-year projects need actual savers to put up capital for 20 years. And so those people will just put that money in that company for 20 years and not have the ability to speculate. I think we'll see more and more of that with more of a Bitcoin economy.
Thanks, Saif. And a follow-up to that regarding the increasing volatility and dangers with speculation. We had that news about the OKEX exchange and the man who tried to commit suicide due to not understanding and just also freaking out about what was happening. Now, do you think, regarding a regulatory perspective and also government perspective, where Japan is trying to do a lot more to make sure that there's no crappy exchanges, hopefully, but weed them out, do you think that as this develops, that Wall Street, but also, regulators, governmental regulators may start stepping in a little bit more?
Possibly. I don't think that's necessarily going to help a lot. I think the part of the problem is that, if you think about it, it's a little bit like the child who's always been on the training wheels on the bike, and now when you put them on an actual bike, they find it really hard to bike with it. So I think there's this idea that because for the past 80 years or so, you've had this notion of government nanny regulator that tells you what's good to invest in and what's bad, which I find to be an absurd idea because, they can't be guaranteeing returns on the market. They can't be telling you that this company is legal to invest in because there's always a risk for loss. And it's meaningless if they decide the profit margins, and it's meaningless if they can offer people guarantees on those profit margins. And we've seen how regulations can go badly in many cases. I think a big part of the mania in the crypto space is the fact that people think that just because something is possible, just because you can do something, that you should be doing it, So it used to be that it was kind of hard to invest. You needed to get an account somewhere, and you need to have a certain amount of money, and you need to pay some fees and so on. But now you can just get online and go on an exchange and start trading currencies for one another, and you could make money. But that doesn't necessarily mean that that's a good idea for most people to be doing. Many people don't have the competence for that. But it's it's a result of the restriction that prevents the natural market from existing and allowing people to learn these lessons in a natural and organic way, so that when they do learn that lesson, it's more extreme. I guess the better metaphor is if you think of places where alcohol is banned. People don't get to drink when they're young, and then they're always when they find the chance to start drinking, they start drinking excessively because now that it is okay for you to drink, you start drinking a lot. And similarly, once people found that, you can now play Wolf of Wall Street on your home computer by signing on to some trading platform, people will go crazy with it. But I think, if regulators make it illegal, people will just find other ways of doing it and other ways of going around it. You can't protect people from themselves. They have to learn the hard way, and they have to. And the more you give them the illusion that somebody out there is protecting you, the more reckless they'll be. That's the real issue. So, you can't legislate against stupidity. They'll always be able to build a better idea.
Thanks, Saif. Tone, follow-up thoughts?
Yeah, you're in the identical boat as Jimmy on this topic, and probably Giacomo.
I'll take that as a compliment.
Yeah, I'm the statist on this topic on this show. In that I'm not going to pick an argument with you this time, but maybe we can explore it in another episode. Where I like the current regulation on solicitation of money from strangers. And I think just those laws have not been enforced at all by the SEC in the realm of the ICOs. So while I would have agreed with you 100% a few years ago, after seeing what's been going on in this space, watching this bubble grow to insane measures where like the SEC could have came in right after Ethereum launched, called it an unlicensed security, shut that whole thing down, and we wouldn't have this, giant ICO bubble on our hands that may or may not have popped. I hope it popped, because if it inflates again and doubles and triples, it's going to end as a disaster. And when these things end in a disaster, those same people run to the government and start screaming for the government to do something. Like, look, I was at Bear Stearns, and I saw what happened to the financial industry in the 2008 financial crisis. And here's what I realized now that it's a few years since. Not a single person, took responsibility for buying an overpriced house. They all blamed someone else for why they ended up buying an overpriced house. And then
financing it. Or financing it, not just buying it.
Right. But I mean, like, they signed the paper, right? Like, no one forced you to take on a stupid mortgage. These things end badly. And if there was regulation on mortgages, the government, didn't enforce it, and the government actually encouraged bad lending standards. So the government could have had better lending standards. They could have forced the banks to stick to those lending standards, protecting the consumer. Now, you're right in the fact that the more the average person relies on the government to do that, the worse things could be. I don't know if there's a happy medium there, but I think allowing or somehow all of these ICO scammers lying all the time about their projects, and the moment they cash in on those projects, they move on to other projects. and no one held them accountable for when those blockchains collapsed, I don't think is also good. Like, I don't know what the right answer is, but I mean, I think that you can do whatever the hell you like as long as you're not soliciting money from strangers. I think once you start soliciting money from strangers, there needs to be some kind of regulation there.
But you see, I mean, I think you've just pointed out the problem with that. You say that I mean, the idea of soliciting money from strangers is just capitalism. So you can't make that illegal. So then how are you going to regulate it? Well, you're going to have a bunch of people in charge of regulating it. And so, you know, from an armchair perspective, it sounds really, you know, really simple. You know, the government looks at shady people and tells the shady people, don't do your shady things. And then it only lets the good people do it. But now what you've done is that you've stopped this market good or this service, which is soliciting money and investment and for investment. You've stopped the success on that market from being dependent on people's success in the market itself and how well they serve their clients. And instead, you've made it a matter of getting the right papers signed by the right person in the right office. And so therefore, you take out the market competitiveness of that and you make the system ripe for corruption. And so, you know, you bring up the example of 2008 as if all of these companies were not regulated, but they were regulated. And the housing sector is one of the most over-regulated things in the US. I mean, Fannie Mae and Freddie Mac have hundreds or thousands of employees, and all their job is to just look at housing. And how well did that work out? Not well, because the incentives for the people in power are to always go in a way that is better for them, for their job, for the growth of their institution, and for them to keep the bubbles in that system growing, because that means more jobs for them.
I agree with you.
In the market, the system is naturally correcting and naturally selecting, where that people who make wrong decisions just lose their money, and then people learn, and then, you know, they're more careful the next time. And the people who make those things lose their names and lose their reputations.
No, but they don't. But this is the problem. But they don't. Like a guy like Dan Larimer is going from scam to scam to scam, right? No one is holding these people accountable. And when you tell people, hey, he's about to leave EOS and he's going to start a fourth scam, and the most common answer I get is, excellent, I got to make sure I get in the beginning.
Yeah, well, I mean, those people are the people who keep following people like that are going to end up violently wrecked. And, you know, you have to keep a long-term perspective on things. You know, you don't, not everything can be settled in a few days and a few weeks. This is still all very new. But, you know, 20 years from now, when Steemit and BitShares and EOS and every other pile of steaming crap that he put his fingers into is a steaming pile of nothing, a digital ghost town. You know, I don't think I would want to be in his shoes. I don't care how much money he makes. I would not want to be in his shoes in that kind of situation. And so it's, you know, it might sound interesting that you would want that regulation, but I think if you think about it, you know, if they had banned these things, they would likely have people would still have managed to, I mean, what they would have done is that they would have regulated it and issued licenses for who is able to issue ICOs. And then who's going to decide that? It's going to be the same Silicon Valley VCs that have been lobbying the government, and they'll get their favorite shitcoins listed as, you know, legit by the SEC. And then everybody can only invest in those few shitcoins that are Silicon Valley and SEC approved. And then, you know, everybody is scammed happily ever after. You know, at least in the market, all of these things are going to fall apart. They're not going to have government guarantees behind them to keep propping them up and keep sending people's money towards them.
Thanks, Saif. Tone, unless you have last thoughts, okay to move on? All right, let's do this. Saif, thanks. That was really interesting. I can't wait and am absolutely signing up for yours, awesome. Which we have right back up, shill time. All right, awesome. So everybody, one last one. We have it next week is the start of it. Go to Patreon or email Saif. It's going to be awesome. So this is big news. This is interesting. So Bitcoin accepted everywhere. Square wins patent for cryptocurrency payment network. Now, Tone, it looks as if you've been talking about this since 2014. Are you excited about this news?
Well, No, not really. I think it's a little too early. Like I'm not, and I would love to get Safe's thoughts on this because it's perfect for him to join this episode. Like Square is everywhere, right? Like most point of sale machines and all these little shops, they all use Square. And I know that the CEO of Square is a big fan of Bitcoin. So it makes perfect sense for them to integrate Bitcoin into their point of sale machine. So here's the good news. This is what Roger Ver wanted, right? This is what Roger Ver wanted was Bitcoin to be a payment system. But as I argued back in 2014, if you want to pull up that Lincoln Douglas style debate, it was written by Ian DiMartino, but we both wrote it. Like we kind of did a debate over email for the purposes of the article. So I wrote my argument, he wrote his argument, and then he asked me questions, I asked him questions. And this whole article was about what would happen if PayPal integrated Bitcoin, because that was the rumor back in mid 2014. And to me, this is not a good thing, because if all of these point of sale machines start accepting Bitcoin, now, like even myself, right? Like I would love to spend some more Bitcoin because I earn Bitcoin. The fact that I can't spend it in many places is forcing me to be a bigger hodler of Bitcoin than I otherwise would. So the ability for me to spend more Bitcoin might make my life a lot more convenient, but it's not good for the price of Bitcoin, because every time I spend that Bitcoin at any of these coffee shops that accept Bitcoin through their point of sale Square machine, that Bitcoin will instantly be sold on the open market. So now I'm not actually helping the Bitcoin economy all that much. The only way this helps the Bitcoin economy is if these users of the point of sale machines from Square are educated as to why they should not sell that Bitcoin through an exchange without even knowing they're accepting Bitcoin. Like accepting Bitcoin and not knowing that you're accepting Bitcoin is, and again, I'm a price analyst, I'm a trader, is terrible for the price of Bitcoin. Now, if you flip the situation, if all of a sudden you think that the majority of these people accepting Bitcoin through their point of sale machines are going to hold on to that Bitcoin and maybe pay their employee bonuses with it, maybe try to get it routed to their suppliers, like unless this Bitcoin is circulating through the Bitcoin economy, all this effort will do is lower the price of Bitcoin in the short to medium term. Now, in the long term, it's debatable, because even Safe, from reading your book, you think that Bitcoin may never be a good, point of sale machine system. It's going to be something on a much higher level, like a settlement currency. I'm not going to go that far. I do think that with Lightning Network, Bitcoin could be a pretty good peer-to-peer currency as well, but certainly not now. An effort like this right now only gives me fundamental reasons in the short to medium term to be extra bearish the price of Bitcoin. If something like this is released to the world in Q4 of 2018, I guarantee you it will cause a 50% drop in Bitcoin. Maybe it'll cause a minor 5% spike up on the FOMO news, but that would only give people like myself extra motivation to go out and spend more money, lowering the price of Bitcoin on the back end. So I'll leave it there, and I'll let Safe chime in on this.
Yeah, I think I agree with you in general. I'm not sure the effect on the price is going to be as negative as you would expect, because I think, the added convenience of being able to pay with Bitcoin is fine. But in reality, most people, I think, the people who wanted to spend their Bitcoins have either spent them all or learned their lessons. So I don't see much demand for this right now. But, the point is that I think the problem with the way that the Bcash people have spoken about this story is that it has made people think that, what's missing are the payment rails that would allow us to have people send money from A to B. And I think that's not really the barrier. I mean, that's a technical problem, but it's a relatively straightforward problem, because effectively, all of the current existing payment infrastructure can be retrofitted over Bitcoin. I mean, there's no reason why even your credit card can't process Bitcoin, or at least your debit card, because you'd have a bank account with Bitcoin, and if your bank just holds Bitcoin for you, then you can have pretty much all of your current banking arrangements can be processed over Bitcoin. But the limitation is not technical. The limitation is in the in the number of people who have cash balances in Bitcoin. The reality is, for the vast majority of people, if you're going to be buying and selling things at this point, the chance of you running into somebody who wants to buy or sell something from you, who also holds Bitcoin, and who's also looking to, say, increase or decrease their Bitcoin holdings as a long-term holding for the long term, at the same point at which you're doing it, is kind of, it's very rare, because right now less than 1%, I would say, of the world holds Bitcoin. And so, that's just not going to happen. So that's why, I don't go around asking people if they'll take my Bitcoin. It's just not, that's not really how it's going to happen. The payment rails are going to emerge as a solution once the number of people who have cash balances and the number of businesses who keep cash balances in Bitcoin increases to the point where many of them start finding each other when they're trading other stuff with one another, and then they start deciding to settle their payments in Bitcoin. However, I'll just say that, in my book, I don't say that these payments won't be done in Bitcoin. I mean, you'll still pay for your coffee in Bitcoin. My point is that you won't pay for your coffee on chain. And so the question now is what kind of scaling solutions will emerge to handle your coffee payment? Because I don't think, I'm pretty sure, there's no way to scale all payments on chain, because that's just not how Bitcoin works. It's anyways, it takes time for confirmations to happen, and people don't need Bitcoin security for every transaction. They prefer something faster, even with much less security than a Bitcoin transaction, which is incredibly secure. But so I think, the question is that because the Bitcoin money is harder than other currencies, people are going to keep going for Bitcoin, and people are going to keep asking for more and more Bitcoin. At least I expect that to happen. And therefore, they will, they'll grow their cash balances, and they'll be spending more of it over time. But I guess the point is that the hard money itself is far more popular than the first layer blockchain can handle. That's the key thing. There's no way that Bitcoin will remain a small, niche, obscure market with a couple of million transactions a day, because fundamentally people will prefer second layer Bitcoin transactions to second layer fiat transactions, because second layer Bitcoin transactions are with harder money.
Yeah, but even something like this is already a second layer Bitcoin transaction. It's not a decentralized second layer. This is whatever Square is going to do, just like Coinbase and BitPay. It's a centralized second layer solution to the payment problem. Now, Lightning will bring people a decentralized second layer solution to the payment problem. Whether Square integrates a Lightning network or doesn't really matter all that much. But considering how Jack Dorsey, the CEO of Square, he contributed financially to the Lightning project, that is something he may be interested in, but he has regulation to deal with, so he may not be able to add that into the Square terminal.
Yeah, it's true. I mean, it's Lightning. Obviously, I don't think it's going to be. It's not very obvious how that might be very helpful for Square, because they're Lightning is more of a peer-to-peer kind of system. So you would expect that with more, you'd expect a more distributed network than a more centralized network like Square. But I think, I mean, I think it's important that Bitcoiners recognize that nothing is going to have the security of the first layer network. That's just, and Lightning is extremely promising. But even the most even Lightning engineers themselves will tell you a Lightning transaction is not as secure as a Bitcoin transaction. There are other attack vectors that are involved with Lightning, and so What the form of the second layer scaling solution takes place is not entirely clear. But I think in terms of the way that I see the Bitcoin standard is that the settlement layer is going to be the first chain, but that's just never going to be able to handle all the transactions that will happen with Bitcoin. So there will have to be second and third layer solutions that are slightly less secure, but much cheaper because they'll be able to scale in volume much more. That's how I would think of it.
Yeah, I'll throw in one final thought, as because you asked, you're not sure how Lightning would actually help Square. And I have to generally agree with you, but I will say from a psychological perspective, right? The CEO of Square investing in Lightning Network and helping bring Lightning to fruition is basically promoting, in a way, Bitcoin, and is like assisting in this, general, confidence of non-Bitcoin people that Bitcoin is going to scale, and for people not to, do something stupid with their money, like go into Bitcoin Cash, right? So just by, bringing the Lightning Network and the concept of a Lightning Network into fruition, it helps him and his business, because the average person does not know. All he will know is the entire ecosystem has agreed that Bitcoin is capable of scaling. So the confidence in having a Lightning Network will go a great way in helping Square and those point of sale terminals to bring people a centralized scaling solution, because people will have it in their brain that Bitcoin is now scalable. So it does benefit him either way.
Yeah, that's a good point.
Safe, just to finish up with you then. Net, following up on Tone's comment, do you think that this is good for Bitcoin, given mass adoption, even if it's right now a means of payment rather than store of value?
Yeah, I mean, a few things can be bad for Bitcoin anyway, so Bitcoin doesn't really care much. I mean, it's probably better for Square than it is for Bitcoin. But I think, there's definitely potential. I could see this being a widely popular second layer solution over the coming few years, because I think people who would say that, no, Square would be a trusted third party and that's against the spirit of Bitcoin, that's fine, but you're not going to have hundreds of millions of people being able to settle their transactions on chain. And the choice then is not between on-chain Bitcoin transactions and Bitcoin transactions on Square, but rather between US dollar transactions or Venezuelan Bolivar transactions or Euro transactions or Chinese Yuan transactions on Square versus Bitcoin transactions on Square. And I think more and more with time, we'll see more people holding balances in Bitcoin and therefore beginning to utilize these sort of things. But then, this is still, after all, a press release. And if there's anything we've learned in crypto is, don't go by the press release.
Thanks, Safe. And Tone, what's up with the price?
Just final thought. I just want to make it clear that even though this is obviously long-term good for Bitcoin, the ecosystem, and long-term good for, like I said, for everything, in the short term, you have to understand that it will have a negative effect on the price. And one of my jobs with this YouTube channel is to educate people on the markets and the psychology of markets, and what does it can mean for a price of Bitcoin. It doesn't mean I have to be right, but this will not be a positive thing for the price. It's a positive thing for the ecosystem, not the price. There's a difference there. I always try to go back to the NASDAQ bubble, where the NASDAQ peaked in 2000, bottomed in 2003, but the NASDAQ didn't reach all-time highs till 2015. It took 15 years for the NASDAQ to recapture its market cap. But the amount of people using the internet only went up and up and up and up that entire time. So there is a difference between market price and the use case of the underlying technology.
Well, buy the rumor, sell the news.
Said.
Oh, yeah. Let's hear TA. And thank you, Safe.
I'd say,
Thank you
hey,
so much.
final thoughts. I'm going to go on with the markets. It's up to you. It's optional for you to still stick around. But we usually...
No, I got to go. We've got people coming over and I'm grilling. I'll send you some pictures.
Do it.
Just make sure that you eat all the meat that you can cook them.
Okay.
Bye, Safe. Thanks for joining.
All right. Have a
Thanks
good day,
again.
guys. Bye.
Hi, Leah.
Oh, hello.
All right, I'm watching the chat. Everyone is saying the market's crashing. I have no idea. Let's
Super
go.
crashing. And hi, Nick.
Let's go and check this out.
Let's do it.
So I have Ugly Old Goat's Medium post right here. He posted a couple of really good articles. So that's still his old article up at the top from April. He posted a pair of really good articles. Here's one of them. So he really dives into the concept of a basis. So, okay, what is this? I don't care. So you really want to read these guys. Google the word backwardation, Google the word contango. I mean, I understand these things conceptually, and then I don't think about them for a long time, and then I always forget which one means what. But you don't need to understand what they mean. You just have to understand how to use them, right? Same thing with a lot of things. Like, you don't really need to know the name of something if you know how to use that something. So, but check these out. I strongly recommend them. I can't believe he's given this away. Like Ugly. Come on, man. You know you can make a ridiculous amount of money, and you know that this arbitrage opportunity that you do, it's going to close. And the more you talk about it, the faster it's going to close. So where is his other article about? Can't find that one. That's August 26th, August 22nd. He had one more. He had this.
Exit. I can't pronounce it.
Exit?
You just passed by it.
Damn it. Oh, this one, the Flying W.
Yep.
All right, cool. I didn't even read that one, actually.
You shouldn't admit to that. Just kidding.
Yeah,
they're really good.
I'm behind. I still have to listen to Tyler and Safe argue about gold. This I read. I read this one, though I don't remember this part. Maybe it didn't show up on my phone. But anyway, guys, I strongly recommend reading his articles. They are very, very helpful. And I can't believe he's given away that information. Like, this is the kind of information that I use in my option strategies and trading, similar to this. And I would never give that away. I mean, that's trade secrets. I can't believe he's doing this for the crypto space. But hey, everyone has their own, views. I give away other stuff that I don't find critical. Maybe other people feel differently. All right, please go back and read the capitulation article from George Salmon. Just Google it. When will the price of Bitcoin bottom out? And this was written in 2015, and it talks about capitulation. Now, my website, and I'm like delaying going to the price. If you guys like this channel and would like to support this channel, we should probably add Saifedean's link to his Patreon in here somewhere. But please check this out. It doesn't cost you anything if you are going to use any of these products or services anyway, go ahead. And if you're going to do any of your Amazon shopping, just click on any one of these links and then go on with your Amazon shopping. That helps out as well. Okay. Oh, you guys going to love this. Oh, boy. No, you're not, because it's not there. Sorry. Price in a minute, guys. Tone vase. Workshops. Boom. Australia. Australia has been added. Chiang Mai is open for registration. Somebody already jumped on it, just opened it an hour and a half ago. Singapore is open for registration. And if you click on view full schedule, you will see additional Australian workshops in Sydney and Brisbane. So they are also open for registration. Once we conclude the Madrid workshop in a couple of weeks, all of this will slide over. Sydney will show up. But for now, I want to see all of Australia. I don't want you guys moving around to find me. I will come and find you. So Perth, Melbourne, then Sydney, then Brisbane. That's the schedule. Took me a while to decide which direction I'm going to walk around it. Not going to talk about the monthly chart. It's going to update tonight. Here is the, this one is also going to update tonight because that's an index. We are going right into the more active chart. And this is, it's not falling that much. This is the stop and reverse points. Not much to say until we go above 8,300 or so. This thing is not going to make any difference. Let's go to this guy here. This is my standard chart. my standard weekly chart. Last time we got rejected off the def cross. This time around, I had two targets. I had my first target on this dead cat bounce at about 7,000. My more lenient dead cat bounce target was at 7,500. I thought that Bitcoin had a chance to make it to the combination of the 30-week moving average and the descending trend line, which is also the triangle resistance point. We are seeing some weakness. It's still too early to say if Bitcoin will make it all the way to 7,500. Now, again, I continue to compare it to the good old times of 2014, and not much different. Just go back to when the 30-week moving average crossed below the 50-week moving average, and you will find a very similar scenario to the current scenario. So that took place, that def cross took place in late August, and we're sitting in late August right now. So it's very, very similar. Yeah, Leah, if there's any good questions, especially the tipped ones, and the euro is still fairly valuable. So go ahead and feel free to ask me those right after. So here's the daily chart. Now the daily chart is still on a green 7. Now I cautioned people yesterday that, hey, everything was telling you to get out of your bullish trades, but the daily still showed you that it's a possibility of 3 more days of upside. Well, we have another day and it's a down day. But before we get a price flip, we can easily get an 8. You got to count backwards, right? This is 6 and that's 5. So, and that's 4. So your next candle is going to compare versus the 4 candle. So as long as tomorrow the price of Bitcoin closes anywhere above 6,700, that's still going to be a green 8. Okay, so this is where things can get a little bit tricky. Like the indicator is not necessarily wrong. Trading it properly is not always going to be easy. But as of right now, I am looking for potential of 2 more days of upside. But guess what? A day like today counts as upside according to the indicator because it's a positive 7. Like because it's the trend that matters, not day-over-day moves. Now, if you were a trader of this indicator using the 12-hour chart, gotten you out of your trade and potentially into a bearish trade. Notice how we are still on a green 2, but there's no price point of a green 2 above a green 1. Also notice how we just got rejected by the setup trend line. The CMF is still positive. The RSI is starting to reverse, almost made it to oversold, overbought, sorry. And the MACD is still positive. But hey, this price action is not good. You are sitting at a moving average. So until Bitcoin gets down below 69.25, there's not that much to worry about, but you want to take these 9 seriously. I was a guest on Crypto Crow yesterday, and we talked about it. I talked about how you had a 12-hour 9, and then you had a 4-hour 9 inside of it, and then you had a 1-hour 9. This should update in a second. Or maybe I should force the update. There it is, right? And you even got another 9. Wow, look at that. So this was a 9 aggressive 13 on the same candle. Wasn't a perfect 9. It was, it was a 9 at one point, but it didn't close as such. The hourly chart gave you 2 opportunities to exit. Be happy about that. Gave you an opportunity to exit yesterday, gave you an opportunity to exit today, almost at the very top. The 4-hour chart gave you an opportunity to exit. The 12-hour chart gave you an opportunity to exit. This is why I've been very, very cautious. And this is why I've been saying, hey, 7,000 could be formidable resistance. Are we headed back to 6,000 and lower? The answer is I honestly don't know, but I give it a higher than 50% chance that we probably are. I remain skeptical of the following, and the following is there are still way too many shorts. This is the longs to shorts ratio. However, it looks like it's starting to trend up. So whenever this trends up, that means there are less leveraged shorts and more leverage longs, because this is leverage longs divided by leverage shorts. As you can see, the shorts are beating longs by 8%, okay, at 92.15, 0.9215. As you can see, since in the last year, the leverage longs have been greater than leverage shorts. So we still remain in a very interesting territory. I really think that this needs to go above zero, where there's more leverage longs than leverage shorts before the market can actually start going down. Like you saw in the last big drop, there were 70%, between 60 and 70% more longs than shorts, and the market fell from, like the price fell from about 8,000 all the way down to below 6,000. I'm expecting the same thing this time around. So one of your bullish things to cling to is the fact that there are still too many leverage shorts, and the market is not going to allow them to get rich. So it needs to get cleared out first. But you can see that we are getting cleared out. That's it. Here's Ethereum. Again, I probably have to update this. Nope, it's moving. Ethereum still has a lot more downside, and Ugly Old Goat talks about that. By the way, Ugly Old Goat thinks that we are more likely that the bottom is in than it's not in, and I disagree with him. I still think that the bottom is not in, and when I change my mind, you guys will know. Amazon and the stock market, actually, I already know if Amazon's making new highs. I have to assume that it is. The stock market is once again making a brand new high. This is a weekly 8 of 9, but I believe on the daily, it's a 9 with a 1. So how would you trade that, right? I mean, wow, we are really breaking out. So how would I trade it? I would have taken my profit on this 9. Now, today, the market is popping. I would just be waiting. That's okay. I'll miss it. But if tomorrow we get a higher open and a higher high, I'll consider getting back into the market. But it would be risky, because I think that next week, the market is going to run into a little bit of trouble. Also, the 3,000 round number is around the corner. Like, I would be looking to start exiting my positions for the short-term trades. But if you are a long-term investor, there's no reason to panic in the stock market. You are above all the moving averages, and they're all trending higher. Even the 30-week is going to trend higher as of next week. So there's really no panic. If you're a short-term trader, you may want to take some profit the way you took some profit on this doji candle. And you have an 8 of 13 on the countdown, 8 of 9 on the sequential. The market could be topping, but on a daily chart, it can easily get you to another 9, okay? Just like what happened right here, you know, back at the top, You know, this was a reasonable place to take your profit on a 913, followed by another 13 the next day. And the next day it went down. And then it had a green 2, and then a green 3, and then finally a green 4, above a green 2, above a 9, above the risk line. That's when you buy back in. It was a short trade. Then you follow the same logic. Hey, 913, take your profit, reevaluate. Hey, 913, take your profit, reevaluate, and look, you saved yourself from a disaster, or you could have gone short. So you just got to keep all that in mind. All right, the cruise. This is my next conference, guys. That's it. This is it. And you only have like 2 days to buy your tickets, by the way. Ticket sales for the cruise end in 2 days. 2 days, all right? If you guys want to see Leah, I know you're going to be the most popular one on the cruise, Leah. Get ready. 3 days left. You have exactly 3 days left, and 3 days, 40 minutes left. After that, you can't buy it because it's a cruise. So 3 days to go to buy your cabins, your last chance. Check it out. It'll be a lot of fun. After that, I will be teaching a workshop in Madrid, then off to Kiev to speak at a conference in Kiev. My picture will be there somewhere. After that, it's the Baltic Honey Badger in Riga. After that, I will be speaking in the Netherlands. After that, I'll be speaking in Prague, also with Jimmy Song and many others. Leah's going to be there as well. After that, I'll be going back to Ukraine to speak at Hack It. Wozniak spoke there. The Woz spoke there last year. Phil Zimmerman did as well. And that's assuming I survive a day at Chernobyl, because that's what I'm doing the day before the conference. That's where a networking day is taking place. And I'll be speaking in Singapore as well. I was just added to a conference over in Singapore. I'll be heading to Singapore after Thailand, and the workshop is in Chiang Mai. Don't forget to check out Vortex's programming with Bitcoin Today course. And want to remind people about Australia. Australia has been added, Perth and Melbourne. But if you click on View Full Schedule, you'll be taken right here, where you can also register for Sydney and Brisbane. And don't forget, Chiang Mai and Singapore are all open for registration on how to learn trading. All right, we're closing out with 900 people right now. I can go ahead and
let's do a couple questions. What do you think?
Yeah, let's do questions. And just want to mention one more time, hey guys, I try not to have sponsors on the show. So if you want to support the show, please check out the affiliate section. If you're going to trade, or if you're going to chart trading or use a VPN, just go through these links. It doesn't cost you anything. And if you're going to do your Amazon shopping, just click on any of these links. I do not know who you are. Amazon is not a big brother of you for me. Therefore, that's another simple way to support my efforts that are totally free for you. All right, let's do some questions.
All right. Oh, geez, you put me on screen share again. Okay. So I'm going to read this directly from your tipper. So any thoughts on BTCC, Bitcoin Core, also parentheses, fork of BCH with 1 minute blocks, and parentheses, getting rejected by CMC CoinMarketCap?
Wait, what? Can you copy and paste that question? There's a lot there.
I can. All right. You want to let
Anywhere.
me know if you want another question.
I don't know. BTCC is BTC China. Okay, so if you want to use that acronym, fine. I will be seeing Bobby Lee, and I still have his hats with BTCC all over it. Bitcoin Core is the name of a decentralized group of developers that program the Bitcoin code. 1 minute blocks is completely ridiculous. Why would you want 1 minute blocks? Having a short block time creates big problems for when you have way more orphan blocks, way more disagreement between miners. The small block time is very, very inefficient. I mean, Peter Todd has made arguments before that a 1 hour block time for Bitcoin would have been way more efficient. So, I mean, that's ridiculous. Why would you want Bitcoin with 1 minute blocks, making it less efficient? Don't forget, it takes a few seconds to validate a block by a miner. So now you want to centralize mining even more with 1 minute blocks, because now it takes a greater percentage of a miner's time to validate another miner's block, as opposed to using that time to find the next block. You want to minimize that time, not maximize that time. It's just like the amount of stupidity in 1 minute blocks is like, it's just like, if that's something that you want, I honestly, I think you're just an idiot. Next.
All right. Also, someone was saying that BTCC, the coin with 1 hour. Okay, so what exists? This is fun now that you're on full screen. This will be a fun one.
Oh, saying it got rejected by CoinMarketCap, the website. I mean, CoinMarketCap, the website can reject whatever the hell it wants. It clearly saw this as a useless, attempt for one guy to get rich or get popular. And hey, look, if you want, and I have to do this a lot, unfortunately. Like, a lot of people see this YouTube channel and they know that it's popular, and I'm constantly asked to like help people out by bringing them onto my YouTube channel and helping them promote. Most of these things are people I don't even know, so obviously the answer is going to be no. I have to be very careful about that, right? So CoinMarketCap also needs to be careful. I mean, why would they want to promote a scam? So, or why would they want to promote a crappy coin, even though they were set on that path from their business model in the beginning? But it's kind of what you have to do, right? You can't accept it all. You have to pick and choose what's important.
Is it possible that we break out of the descending triangle to the downside with the current amount of shorts?
It's possible. It's very possible, only because there was a lot of people hodling, and they're hodling on behalf of others, and they're hodling with potentially weak hands. And remember, the market has to crush the maximum amount of people. And while on a smaller scale of small traders, we can look at it from the perspective that the maximum people will get hurt if the shorts get wiped out first. But on a grander picture, when you read these articles about Novogratz, having hundreds of millions of dollars worth of Bitcoin, Tim Draper he probably still has like 400,000 Bitcoin that he bought in the Silk Road auction, right? That he's holding on behalf of his fund for his investors. So maybe the way this bull market ends is with those guys getting hurt and their investors getting hurt, and they can represent the 90% of the value that is lost because the market has to hurt the maximum amount of people. And those that have been, properly capitalized to be short-term leverage short on Bitfinex or Bitstamp, maybe not Bitstamp, but Bitfinex or BitMax. And if they are properly capitalized and leveraged, and they could be the winners on the backs of the 90% of the losers that entrusted in these big funds holding these big returns. Because remember, Tim Draper's 400,000 or 500,000 Bitcoin may look very pretty sitting there at $1,000 or $2,000 per Bitcoin when he bought it at $200 or $300 a Bitcoin. But remember, he has to answer to investors, and those investors are gonna ask him the following question: why didn't you sell at 20,000? Because now they're not going to see it as we're up 3x from 2014 or 2013. Well, sure, we're up 3x from 2013, but the stock market is up over 100% since that time, right? So I could have done that myself and done almost as well. How are you going to explain a 95% drop in my net worth because you weren't smart enough to sell at the top? And I can see someone like Tim Draper almost, I know it's his fund. I don't know how much control he has over it. I don't want to spread any rumors, but I don't know how the majority of the people are going to get hurt at the end of this bear market. But I am doing a statistical probability that the majority of the people have to get hurt. And I don't know if that majority is the unqualified traders on BitMax and Bitfinex, or is that 90% qualified traders like Novogratz and the Drapers. I have no idea, right? But this is, but the question was, can you see a drop in Bitcoin from the $7,000 area all the way to a $3,000 area with the shorts being in the right position? And the answer is yes, if the people one tier above them get hurt.
As a follow-up on that, someone said, I understand the theory of, quote, hurting the max amount of people, end quote, but does this theory stand during a bull market? Example, we were in an S&P bull market. Technically, the minimum amount of people are hurt.
Well, it almost does, right? But not exactly. I wouldn't say the minimum amount of people are hurt. Over the last 10 years, the average person still has not come to the realization that the stock market rises. So many people hate the market from what they saw. When they saw their retirement funds lose 50% of their value in 2008, 2009, so many people converted their retirement accounts, their, allocations from their companies into like the stable bond funds. And these people have been earning, 1 to 2% a year for the last 8-9 years. And they've been getting hurt because they could have been earning 10 to 15% a year, because the market's been on one of the greatest tears we've had in history, as Tyler likes to point out. So yes, the average person in the stock market has been hurt because the average person has not been participating in the stock market. The average person has been complaining that the stock market is going up, all because of corporate buybacks of their own stock, all because the market is manipulated. So yeah, the average person that to this day is scared to put their money back in the stock market from the 2008 crash has been hurt to the tune of doubling their money, maybe even tripling their money. I got to check what the returns have been in the stock market since, mid 2009.
All right, last question, because we lost Thor. He's sleepy, so we gotta get excited with this one, which is a bit of intensity. What exactly will be your confirmation for a bull market? Give us some indicators.
Well, at the moment, as of right now, if we never cross below 5,000, my indication of I will start considering that the bottom is in and the bull market is starting to happen only after we break the recent highs. The recent high was $8,500. Until we go above $8,500, I will not even consider that the bear market is over. So I would need us to stay above 6,000 and break 8,500. Now, if the market reverses right here from $7,100 and we go down and make a brand new low, if right now we go down below 6,000, go down to 5,500 or lower, my view will now change, and I could become a bull with the break of 7,100. Like once this is a noticeable high, the way 8,500 is a noticeable high, then that becomes the new hurdle to consider that we're back in the bull market.
So we got 90 minutes going. What do you think?
I want to check on one thing. I just want to check on one thing. I'm gonna go back to screen share because I just remembered something that I said during one of the shows yesterday, on the Crypto Crow show. So we were talking about entries and exits of positions. And what I told him, we were doing this show about 24 hours ago. So, walk back 24 hourly candles. And we were around this time here. It was around this candle or this candle. So in the UTC evening of the 28th. And I said, hey, if you acted on a short trade, if I was to act on a short trade right off of this 9 right here, okay, I probably would have split this 9 because I had a 4-hour 9, a 12-hour 9. I said, hey, what is the range of this candle? The range of this candle had a low of 7,050. It had a high of 7,093. Like I said, I would have gotten into a short trade somewhere in the middle. Let me not cherry pick. Let's say I shorted at $7,050. That's reasonable, okay? Now, I told him yesterday that my stop loss, when would I admit the trade was wrong? I went right over to this candle right here, this giant candle with a 6 on it, 4 hours earlier. What was the high on that candle? The high on that candle is 7126.1. And I said, hey, if the price of Bitcoin goes above that number, I would admit I've made a mistake on my short trade, and I would exit that trade and try another short trade maybe next week. So let's see if my stop loss would have gotten hit. And you can go back to that video and watch me say it. So I'm just gonna go to the 12-hour chart, right? And I'm gonna say, hey, what was the high? So that would have been it. Yeah, because that was the candle after, right? So this is the candle, the first half. So this is it. That's the high was 7139.4. But let me see if that happened before, or am I on different exchanges? Let me go back to that's the 4-hour chart, right? Yeah, I'm on different exchanges. So so what was the high here? Okay, so that was the high. That was the 71394. So it would have just touched it just before the drop. Okay. Now I did say it would be higher than that, right? I don't remember where I drew my line. It really depends on what kind of leniency you have. It's very possible I would have been stopped out of my trade. If I got stopped out of my trade right here, which I probably would have, when would I have reconsidered my short? Well, guess what? A couple of candles later, I had a 913 on that became a red 1, and then boom, a red 2 lower than a red 1. I probably would have gotten back into that trade around the same vicinity my first trade was, and my second trade would have worked out. Okay, so there's nothing wrong with getting stopped out because the price did nothing. It took its time getting ready to drop. All right, just a quick thing. Just wanted to follow up on what I said on another podcast.
Awesome. Thanks, Dylan. Okay.
I think we should call it, unless there's some amazing question.
I think we should call it. All of your questions, guys, are so amazing. So thank you. And still going to call it. You can listen to this later on the audio podcast. Thank you, Corey. Nick was in the house. Thank you, Nick. Have a great day. Tone, it was like really difficult for me to keep